Good morning. Welcome to the On the SEAF model. I'm Jack Kosar. This is effective for the week of August 10th, 2026. Let's get started. SEAF signals for this week. We retain financials and we pick up technology and industrials. Technology comes in with a really strong week with a technical week of one. This is after a trading week of one, having a tactical week of 10, but a strategic quarter of two. Again, we've seen kind of, as we've been speaking on it, seeing really rapid movement within the sector space, and just in terms of risk on, risk off, defensively aligned, offensively aligned, and it's something that is unique to the moment right now. Whether it be geopolitical, whether it be Washington, whether it be indecision on broader investment managers trying to navigate what they may or may not determine is an AI bubble, what to do with energy with our war in Iran. It's got money flowing all over the place, and that's what SEAF is doing. It's reading the moment, and the moment is currently hyper accelerated rotation. So just kind of a note there. As you can see here, we have 3 14s in a row. For those of you new or first time watching this video, this is just to kind of reiterate some of the rules here. When you do have 3 sectors with the same score, especially when it's indicative of what is going to be a SEAF signal versus what's not going to be a SEAF signal, we then default to the trading week, which is the newest money. So in this case, industrials has a 2 on the trading week, which beats out 3 and 5 for consumer discretionary materials, respectively. At the bottom here, we have utilities, a little bit of a negative skew here, 9, 11, 10, with a nice, decent outflow coming out of utilities, similar for energy. Speaking of that in again, out again situation, negative 0.45 here. Overall, again, just SEAF is keeping up with the speed of the sector rotation at the moment. And at the moment, we got money going into financials, industrials, and technology. Wanted to highlight our heat map. As you can see here, heat map is not aligned. When we if you guys go back to previous videos or kind of highlight other things that we've talked about in the past, when this model is really clicking on all cylinders, you see the top portion of the heat map here kind of all green, showing all green. It gradients into yellow and then falls into that light pink and then finally into red. Obviously, we got a little, I call this Picasso or Rorschach test. We got colors kind of all over the place. And that really, again, has to do with the speed in which money is flowing in and out of these particular sectors. And it's doing so relatively rapidly. Not oftentimes do you have green on the trading week and then green on the strategic quarter with red in the middle. That means that money is very much cycling through these sectors. Similar thing over here. Some green in the front, sandwiched by red. It's just, we're a little bit all over the place here. So, technology 0.59% on the inflow. That's above that 0.4%, which is significant inflow. We'll see if it comes to stick here. Industrials, consumer discretion are also showing some life here with 0.28 and 0.26 respectively for the trading week. So not some, incoming cash flows coming in here. Financials near zero after some really strong weeks. So highlight to see if this is going to be a break in the action for financials or if this is the seed change. We don't know yet. And then again, money flowing heavily out of energy and utilities. Here is our sector AUM. We came back down. We touched through this 380 billion mark, and accelerated through. This is some very steep, strong acceleration, which produced about 6% in the S&P 500 only over a course of a couple of days. So it was an aggressive move up, aggressive flows. We are now nearing all-time highs, near that $400 billion mark. And we are well above that 21-day moving average. Now, what we have seen as this flows have been very erratic is strong outflows and strong inflows. Managers are attempting to stay on sides. They do not want to hang out being off sides for too long. What we tend to see in other trending markets is you see these managers kind of willing to sit through their conviction a little bit. They have a theory of the case, whether it be fundamental, whether it be data, whether it be technical, but they have an idea of where they want to be and what the market should be doing. We are not seeing that right now. I don't think we're seeing managers sit through any ideas longer than they absolutely have to by their investment mandate. And that, I think, is really dictated here, as you guys can see, these rapid inflows and outflows. I think managers are really trying to figure out what we're doing. Largely been sideways, again, really going back toward May, though we are breaking out to new all-time highs. A new case right now, Sector 8 total AUM chart is pointing toward bullish, positive outlook here as we're sitting well above that 21-day moving average. But again, as you can see here, we had some nice strong trends. Will we resume something we saw from April through May, or are we going to have these steep reversals that we saw in late May, early June, and then this last one coming in late July, early August? Heading into our rainbow charts, utilities is our worst SEAF, is the worst on the SEAF table. An overall score of 30. Seeing that strong relative underperformance that continues the overall downtrend that we're seeing in utilities after we kind of peaked here in relative performance over the last year in March, kind of a downward slide since. And now we're in that deep void after kind of hanging out in neutral for a little bit. So you can see that sideways movement after we hung out in neutral. Now we've crashed down through and really underperforming the broader market as we're heading into this void. So, in terms of SEAF model, telling you where to get out of the way, stay out of the way, utilities. Financials have been strong, sitting up in that middle to upper favored for quite a bit of time here. Nice, strong relative outperformance versus SPY. Like I mentioned, I think a little bit last week, we're coming up on this a little bit of resistance on the relative performance side of the chart. A little bit of a pullback here on financials, but again, still middle favored. Some of these things take a little bit of breather. So as they kind of accelerate up, they breathe, and then they are allowed to take to that next level. Again, we're not forecasting here, but as of right now, sitting in that middle favored, pretty decent score overall ranking of 9, being brought down by that trading week. This is a space to wait and see. Are we going to resume trend and continue this nice bit of relative outperformance that we've had going back to early part of June, or are we going to reverse back down? Only time will tell, but things still looking good for financials. Technology had a big acceleration on the trading week, coming in at 0.59. As I mentioned earlier, technology is in a little bit of a weird space. It's kind of a are you, aren't you situation. Is AI going to allow for these companies to really start to produce some strong revenues, or is this a bit of a bubble and we had a lot of spending that we didn't need to have? That seems to change on a weekly basis. And as you can see here, tactical month 10, trading week 1. Quarter at a 2. We are overall in a little bit of a sideways or downtrend going back to early part of May, but we have this nice little spike up as we've accelerated, as we kind of touched down to that avoid through neutral up into that lower favored. We have some outflows coming out of here. That produced some of this relative underperformance in this last month. But trying to accelerate through here. If we continue to see these strong flows, along with the fact that we're a little bit of on that risk on moment here in the AUM, technology is a good place to be as it tends to lead. So as long as we're going to continue to make this upward move, tech is a good spot to be in, especially with this strong acceleration. And as I mentioned in the heat map, a significant inflow on that trading week according to our algorithm. Next is our industrials. Industrials comes in at overall of 3, 2 on the trading week, 4 on the strategic quarter, and it's that month kind of holding us back, tactical month of 8. We've had little spurts of relative outperformance, relative underperformance. Overall, kind of still in a little bit of an uptrend here, going back to the late part of May, early part of June. So it's got some strength here in industrials as we had that favored, came back down, touched to neutral, and accelerated out. We haven't really seen that turn itself on the relative performance, but significantly lesser flows than we're seeing on the technology side, about half on that trading week, and then the accumulation on that strategic quarter is also about half of it is on technology. So not seeing that super acceleration yet, but it is a SEAF signal, and we are seeing a nice inflow on the trading week. So continue to watch this space. And last but certainly not least, I just wanted to show in consumer discretionary seemingly bottomed here in terms of its relative performance, underperformance versus SPY, long downtrend, but we did accelerate into that lower favorite. This is our fourth on the trading week, but seeing that positive skew that I like to see. So 8-3 to a stronger 3 in green. Nice little bit of positive uptrend, bouncing off the bottom of this relative performance chart. Not a SEAF signal currently, fourth on the trading week, but note it is scored the same as it's an overall score of 14, just like industrials. This is a place to watch here for consumer discretionary. If we can accelerate up into that middle to upper favored, we could see a continuation trend on the relative performance. We're not here yet, and I wouldn't suggest a lead off. We haven't gotten enough on that relative performance side, but to avoid a similar spike like we had here in the middle part of May, where we kind of accelerated up, but we continued this overall downtrend. I want to see this thing kind of shoot through the moon before we even attempt to lead off here. And honestly, money's been flowing a little bit too quickly. We don't want to go and take on extra risk or lean into something that isn't materialized yet in terms of a really solid trend until some of these flows start to slow down and we're not getting such this whipsaw. It's one of these things where if you kind of look at a lot of these rainbow charts right now, it really kind of dictates what we see. There's a lot of zigzag. We're not seeing that nice steady hang that we get. We're seeing a lot of up and down through that neutral, avoid, in favor. That's that money ripping through the different sectors. Again, the SEAF model is doing what it's supposed to do. It is tracking asset flows through the 11 sector spiders. And if they move fast, SEAF is going to move fast with it. And that's what we have. So that's all I have for this week. I look forward to breaking down the SEAF model with you all next week. And thank you.